Good morning, members. This is JW Jones coming at you with your midweek video analysis. Hope everybody's had a good week thus far. Current time is 7:40 a.m. Eastern Time on this 29th day of August 2013. Let's go ahead and jump into the charts. We're looking at the S&P 500 E-mini futures. This is the daily time frame. And what I want to kind of point out is obviously we had that big selling pressure that we saw on Tuesday, and then yesterday we tried to retrace, came all the way up, and at the end of the day just got slammed. This morning we continue to push to the upside. We'll see if the bulls can get anything going. But the flip side of this is that if lower prices are going to happen, they're going to happen from higher prices. You're not just going to see another huge move like what you saw on Tuesday. We could have another kind of day where it's really quiet, choppy action, slide bias to the upside, and that plays right into a possible, a major sell-off potential. I think ultimately I've got these levels listed. There's a lot of support right around 1616, but below that around 16, yeah, call it just 1600, and then 1555, 1560. Those are your key major support levels on the chart, and I think it's important to note, where those levels are. I don't. I think the only way that I would get nervous about the bullish case if I was short, which I mean for the OTS portfolio we are leaning short and we're leaning short going into the sell-off. This little high right here around 1666, 1667, a move above that would potentially get me concerned that higher prices would be coming. A lot of resistance overhead. We'll see what happens, but do have some economic data that's going to be released here shortly. But that's where I stand on the Nasdaq, or excuse me, on the S&P. I do think that you're going to see lower prices in the near future. So just kind of where I'm at over the next few weeks, I think we go lower and probably test 1600. Here's the Nasdaq. In the Nasdaq 100 futures, pretty similar situation. Getting a bounce right at that support level. Saw the plunge yesterday at the bell. We're continuing to push higher. Haven't quite taken out yesterday's highs yet in the Nasdaq 100 futures, but we're getting very close to those levels. We may see price really expand on the Nasdaq, and this is where I think there's opportunities to find stocks that may be extremely overbought and allow for new short side entries. A break below 3050 is going to target the 1550 period moving average as well as 3020 as the support level. Below 3020 and the Nasdaq 100 gets ugly in a hurry. A quick look at the Russell 2000, and again all of these major stock indexes are trading to the upside, and the Russell's trading right up near the yesterday's intraday high. Resistance is overhead with the 50 period moving average. A break of that 1008 level is going to target 1000, maybe even lower, with 940 being a longer term type of target. I tend to think that all these equity indices, while they may bounce today, they may even bounce again tomorrow, are all likely going to end up trading below current levels, at least for a period of time. So that's kind of where I stand at the moment. Here's the VIX. The volatility index yesterday ended up closing the day down about 1%, but again, still trading right at the top of that resistance level from here. Next resistance is probably somewhere between 18 and 19, and from there up as high as 21 to 23. I think you're going to see the VIX continue to go higher from here, and I think it may consolidate. We may even see it close that gap all the way down to 15, but then I think it ultimately goes higher. Here's a look at the transports, IYT, and the transports essentially have gotten hammered, got up to 120, and then since then have really gotten hit hard. Yesterday we actually saw some more weakness come into the transports, and today I would expect a bounce. We actually took out the previous lows. This looks like to me, and you can obviously see there's some resistance, or there was some support, I should say, which now is which have taken out since, but below 112, I think you're going to target the bottom of this kind of rising wedge, or even you could even call it a kind of a megaphone top pattern. Below this trend line, you got the 200-day moving average, but then I think you're testing down to the previous all-time high, which would be a huge pullback from where we were, nearly 20% or more. Here's a look at the financials, ticker XLF. And XLF yesterday ended up closing slightly higher, but trading to the bottom of that channel, going to the upside. A break of that channel is going to target this support level right here, right around 18. We'll just call it 1855. That's going to be the target level if this rising trend line breaks to the downside. And I think you could see a nice bounce in the financials here. We could see a big bounce, and then we could get a reversal that takes out those key levels. So keep an eye definitely on the financials, the transports, and the VIX. I think they're all going to be tells. Here's the dollar index futures, which is exploding to the upside this morning. And this goes into what I said a few days ago. If the dollar gets up and goes, I think the 50-period moving average is going to contain it. It may be able to push through there, but 82.50 is going to be major resistance. So keep that on the radar. But the dollar rallying is putting pressure on some of the other currencies, particularly the euro, and other major currencies are also trading light against the dollar here. If it can push through, 82.50 is the short-term target, and I think it could very easily get there. I think people are going to move money into the dollar simply as a function of risk management and to get into something that they believe to be much safer in the short term. Here's gold futures, and gold futures are trading down about $6 an ounce. Came right up to resistance, and are pulling back. Textbook pullback. I don't think you're going to get a real strong pullback, but you could potentially, in the worst case scenario, probably see a pullback down to around 1360. I'm not sure it even gets that low. I think you can maybe see price come down to around 1400 or so, and from there reverse and test those highs and try to push through. But I do think at least a few days of selling pressure here do make sense. And obviously the strength in the dollar is helping gold move lower. Here's silver futures, and obviously silver had a pretty ugly tick overnight where there was some very strong selling pressure that came in, got below 24. Right now, short-term support I would say is probably somewhere around 23.30. Below that level, we could go all the way down to the 20 period. But I think you're just going to see a few days of consolidation and selling pressure, and then you're going to ultimately move on to the upside. I do not foresee a big, huge monumental sell-off here in gold or silver. I think you're just getting a correction, and then ultimately prices move back to the upside. Here's oil futures. Oil futures trading lower, but still holding that breakout level. We saw that big break yesterday. And so far they tried to get them down back below that support level, haven't been able to actually do that. And I think we're likely to just consolidate and shop around until we get more confirmation that the Syrian conflict and the things going on in the Middle East escalates, and then I think you could see oil prices continue to move to the upside. Here's natural gas, and natural gas also here recently. I was expecting a bit of a reversal. As we zoom in, it just didn't come. It looked like it was going to come, but price just continued to drift to the upside. 200-day moving average is your resistance at 367. Above that, this descending trend line, and the only way I get super bullish on natural gas would be a breakout that shows some momentum above this trend line. I don't think we're going to get it. In fact, I'm not sure we'll even get there. I think the 200-day may come into play and hold back price, but ultimately price is headed into a major resistance level, and I'm not convinced it's going to have enough momentum to push through. Definitely something we'll keep an eye on, but at this point I'm neutral on natural gas. Short term I think it goes higher, but in the intermediate term I think you get some kind of pullback. Here's the 10-year Treasury futures, and the 10-year actually trading down below the resistance level that is now overhead. We're coming down back towards the lower end of the price target, and if it breaks the previous lows, then this thing's going to get hit hard. Treasuries are in trouble. They can't get out of their own way. Even on a bounce back on Tuesday, they haven't been able to hold. This is a very weak sign of that the buyers are just not motivated. There's not strong buyers stepping in to prop up the price. So that's a very bearish sign for the 10-year Treasury and something that bears watching. Here's the 30-year Treasury, and I'm pretty much have the same opinion of it. Essentially, I think both 10 and 30-year Treasury futures are in big trouble longer term to the downside, but short run it sure made sense that they would bounce. They did bounce, but I would have thought they would have gotten a little bit stronger bounce than what they did. If we get some really, really strong selling pressure, I wouldn't be shocked to see Treasury start to rally just as a function of the safety trade. But other than that, I just think they look very weak. I think Treasuries are in big trouble. While short to intermediate term they may pop to the upside. I think you're going to in 3 to 6 months from now they could be much lower from where they are now. So that's kind of where I stand. I think it's going to be an interesting day without a question. I would keep an eye on the first few hours of trade to see if the bears make a run at trying to break the bulls back and really push prices lower. If it's going to happen, it's going to happen from higher prices, and the way it looks, we're going to see higher prices at the open. So we've got a little economic data on tap. I will follow up if that has any major impact, and we'll go from there. Again, this is J.W. Jones signing off for OptionsTradingSignals.com and TradersVideoPlaybook.com. Take care. Let's have a great rest of the week. This is J.W. Jones, over and out.